Welcome to the Investment Circle. On this video, we're going to discuss the best allocations for your investment portfolio, whether you're a beginner, you've been around the block a few times, or you're really advanced. Again, I'm Adil Anwar, and this is the Investment Circle. When you're first starting out investing, it's best to stick with products that are less risky. So those would be products such as ETFs or what they call passive investments, right? And the reason why they're less risky is because they're not leveraged like some of the other products we'll discuss in this video, such as futures, cryptocurrency, options. Like when I buy one option, I'm controlling about 100 shares of value with that one contract. And when I'm buying, let's say, for example, the S&P 500's futures, right? The ES Mini, I'm controlling $165,000 of notional value, which means if there's a slight move up, I can make a lot of profit. But if there's a move down, I can lose a lot of money in the blink of an eye. So when you're first starting out, it's best to stick with either ETFs, which are baskets of stocks of up to 8,000 stocks in an ETF, or stick with companies that are blue chip companies that you know really well, inside and out. You use their products every day. You should stick with investments in those companies because, it's a much safer investment. I doubt that Apple tomorrow is just going to, go out of business. I know they had a lot of headwinds a few months ago. People were acting like, it's the end of the world. In October 2018 up to January 2019, people were acting like, Apple was done for, put a fork in it. Their iPhone sales had gone down, but I actually took that as an opportunity to buy stock in Apple because it was all the way down to, $160 at the time. And it just made perfect sense to me that I should invest in this because, people look at Apple as like a luxury product. I've seen the craze that people, when they're waiting outside of the Apple store, when the new iPhone 11X Pro Dingadapo is coming out, so when people have fervent views of a company, like they're absolutely insanely obsessed with it, if the other factors make sense to me, that could be a company that you should look into investing in as a beginner. So when we're discussing breakdowns in this video, I don't mean for your investments as a whole to have these breakdowns, because of course you want to also be invested in real estate and bonds preferably. And also what I like to do is I go to yieldstreet.com and I find a few investments that are a little off the beaten path. They have low beta or correlation with the stock market. So if stocks tank, you'll still be able to, get returns from some of these other asset classes. So in this video, what we're going to discuss is stocks, futures, crypto, options, and ETFs. That's it. Just those five. I think that, if you're looking to invest in different things, different products, I'll create videos on that stuff too later. And I think as a beginner, just starting out, you just want some exposure to the market. I know I keep on saying this, I keep on hammering it into you, but just look at this graph. 25-year-old versus 35-year-old, the difference in how much money just 10 extra years of compound interest can make on your bottom line. So when you're starting out investing, your goal is to just do it. Just start investing. Obviously, the less risky the product, the better, but you need to get your foot in the water. I know when I first started out, I would just keep doing the most insane amounts of research over a single company. I'm caring about every small metric. I'm like, oh, should I stick to the fundamental data? But look at this technical analysis. There's a head and shoulders pattern forming. Oh, but that's completely opposite to what the fundamental data was saying. You get yourself mixed up and you're just overthinking it. Just honestly, I would say jump in head first and figure it out as you go along. Stick with these much less risky products and you'll be able to start seeing a return, and that compounded interest, even if it's a small amount, 7 to 9% keeps on compounding year after year. It can turn into huge dividends for yourself down the road. Remember, as always, investment advice and tax advice should always be reviewed with your CPA, your certified financial advisor, because you could just be a financial planner, have no certification, which really there's no difference between you and that guy. So maybe don't listen to him. Make sure they're certified and, ask them about any of the topics we discussed in these videos. This is for entertainment purposes only. The beginner portfolio. In this portfolio, What we're going to look for is a 55% exposure to ETFs, 40% to stocks, and only 2.5% to options, and another 2.5% to either crypto or futures, your choice. As it stands, I made the options and futures portions very small, a combined total of only 5%, so that you could easily remove those and just stick with a 55% ETF and a 45% stocks balanced portfolio. I know that Jim Cramer and some other investors, they recommend sticking with something as high as like 90% ETFs, but I don't think you have to be so dramatic. The companies at the top of the S&P 500 do a lot of business, and I think they control the majority of where the S&P 500 will move in the future. So by being invested in those top blue chip companies, I think you'll be better served than, investing in some of the lower portion of the S&P 500. Because remember, it's roughly 500 companies. It's not even, exactly 500. I think last count was like 503 or something like that. But the companies at the bottom of that list, some of them have a lot of dead weight. So you might not want to be exposed to those companies as much. For the ETFs, we discussed this in an earlier video. I prefer Vanguard, but iShares also has some great ETFs that track the S&P 500. There's IVV by iShares. There's also the VOO S&P 500 tracker by Vanguard. That both are fantastic. They have pretty low expense ratios, and so you're going to be getting the most bang for your buck by investing in them. When you're picking your stocks, also, it's important to consider, where is the company looking to go in the next 5 years? When you're value investing, I know sometimes it makes sense, like to invest in a company such as Macy's right now. Macy's is very low compared to their historical price average. But do you see Macy's being able to compete with the behemoth that is Amazon? I don't. So I don't look at that as like a value investment. In the same way, you could have invested in a lot of now defunct companies. Like, would you invest in Blockbuster when they were, going up against Netflix? I don't know. I wouldn't want to be that guy, to be honest. So when you're value investing, make sure that the company has a plan of action of how they're going to get back some of their lost profitability in the future. And if they have too many headwinds and they're competing with too many companies that are large megalithic companies, I think you should shy away from those companies. Even if some of them might have fantastic dividend yields, it still is better to not get attracted by those numbers and instead stick to what you know. The well-versed portfolio breakdown: 55% stocks, 30% ETFs, 10% options, 2.5% crypto, and 2.5% futures. In this portfolio, the positions of stocks and ETFs are basically reversed. Because at this point, you should be better at, picking the stocks that make sense for yourself. Options still give us the ability to make the types of profit that, we want to be making from our investments. But since they're highly risky, we still stick with only 10% usage of them. Nowadays, this is kind of the portfolio that I use myself, even, after having some significant experience investing. I stick with between 15 and 20% options. I'm really close to this well-versed portfolio. Again, since options are highly leveraged, letting us control 100 shares using just one options contract, what we use is CML Viz and their backtesting engine. It's worked out really well for myself. Here in the last month and a half, I've gotten 15 out of 17 picks correct using their backtesting engine. So yeah, it's done wonders for my options trading game. Basically, what CML Viz is it's a service that backtests prior options trades to see what worked and what didn't work in the past. So, for us, this is very, very vital. It lets us see, does this trade make sense? Will it make sense in the future? And we can, play with a few parameters and, make it fit and work so that, we can make money off this. As always, I'm only going to recommend products to you that I use myself. This is not going to be some sounding board to, buy this product. Nah, none of that. I'm going to just tell you what I actually use in my own trading. And Trade Machine by CML Viz is something I use. While the other products they have, I don't use those. Kind of think they're a waste of money. And so, anyway, the last portfolio, the advanced portfolio. In this portfolio, we'll use more risky asset classes such as crypto and futures products that are a lot more leveraged because they're going to allow us to get as much of a return as possible. And I'm hoping that by now you have at least 5 years of experience in trading. The leverage with crypto nowadays is absolutely insane. If you're able to use Binance, you're in a non-American country, that Binance still opens its doors to, you can have leverage of up to 125 times. And, that can make you a millionaire literally overnight. But again, the same thing, there's a lot of risk that comes along with having high leverage because, if the product goes up only 1 penny, I'm going to make back $1.25. But if it goes down 1 penny as well, I lose $1.25. And you can see how that can get really hairy really quickly. Now, the other products that we're going to invest in are futures, which they have huge notional value, right? Using one futures contract, I can trade like 1,000 gallons of oil, for example. I know a lot of the time when I first started out, I would try to stay in investments, waiting for them to turn around. And sometimes it would work out, but sometimes it would be a nightmare. As always, guys, I want to say thank you for checking out the channel. If you could please like and subscribe. It helps us get these videos out in front of as many people as possible. And also comment below. Let me know what kind of content you guys are interested in seeing as we try to build this channel out. If you guys don't mind sharing, I do put a lot of time into these videos. They might not look like it yet, but we're definitely putting in a lot of effort. So looking forward to making a bunch more of these with you guys. Can't wait to talk to you soon.